Chapter 5. Accounting for merchandising operations. During this presentation, we will be talking about the cost of goods sold and we will be seeing some formulas. When we use the periodic inventory system, we talk about cost of goods sold. How can we determine our cost of goods sold? First, we need to identify our inventory at the beginning of the period. We add to it the purchases. We deduct the ending inventory. To determine the value of the inventory at the beginning of the period and at the end of the period, we can do a physical count. However, to determine our purchases, we start by putting our purchases, we deduct all purchase return and allowance, we deduct purchase discounts, we get net purchase. Then we add the freight in, and this is how we get the cost of goods purchased. So the cost of goods sold is the inventory at the beginning of period plus cost of goods purchased minus ending inventory. How can we prepare a statement of cost of goods sold? First, we start with the inventory at the beginning of the period. We add to it the purchases. In the purchases, we take the purchase account, we deduct from it purchase returns and allowance, we deduct purchase discount, we get net purchase. Now we add the freight in, and we will get the cost of goods purchased. When I add my inventory at the beginning of the period to the cost of goods purchased, I will get cost of goods available for sale. Now I deduct the ending inventory, and this is how I get my cost of goods sold. Let's take an example. Our company is preparing a cost of goods sold statement using the following accounts. We have inventory on January 1, $19,800. We have purchases for $70,750. We have purchase discounts for $1,600. We have inventory on December 31, $16,950. Purchase return and allowance $6,300 and freight in for $1,350. Now let's prepare our cost of goods sold statement. First, we start by putting the name of the company, the name of the statement, which is cost of goods sold, and the date, which is for the year ended December 31, 2014. We start by putting inventory on January 1, which was $19,800. Then we put our purchases, we deduct from the purchases all purchase return and allowance, we deduct the purchase discount, which is $1,600. The total of the purchase return and allowance and the purchase discount is equal to $7,900. So my net purchase is equal to $70,750 minus $7,900, which is equal to $62,850. Now I add my freight in, $1,350, and I'll get my cost of goods purchased, which is $64,200. By adding the inventory at the beginning of the period to the cost of goods purchased, I will get the cost of goods available for sale, which is $84,000. Now I deduct the balance of my inventory at the end of the period, which is inventory on December 31, and I'll get the cost of goods sold, which is $67,050. Let's take a look at some of the formulas we learned. Net purchase is equal to purchase minus purchase return and allowance minus purchase discount. Cost of goods purchased is equal to net purchases plus freight in. Cost of goods available for sale is equal to beginning inventory plus cost of goods purchased. Cost of goods sold is equal to cost of goods available for sale minus ending inventory.